Global inflation 2025. The core number and global trend. The big picture global headline: inflation is projected to continue its decline in 2025 after peaking in the post-pandemic years. For example, the IMF projected global inflation to be around 4.2% in 2025, down from prior year estimates. And major organizations anticipate the slow moderation will continue. The catch: despite the global decline, inflation will remain above central bank targets like 2% in many key economies, indicating that the battle against high prices isn't over. 2. Regional divergence, where inflation is sticky. The most important story for 2025 is the extreme variation between regions. Show this as a tale of two worlds. The US spike risk upside inflation. The US is a major focus for global risk due to trade policy tariff impact. New or escalated import tariffs are the top upside risk for global inflation in 2025, primarily driving prices higher in the US. J.P. Morgan projected this could push US core inflation higher in the second half of the year. Labor market. The tight US labor market and strong wage growth continue to exert upward pressure on service prices. Europe's moderation downside inflation. Inflation across Western Europe is generally expected to move lower, potentially falling below 2% in the Eurozone, though the UK's inflation may prove stickier, particularly in services. China's deflationary pressure. China is expected to maintain a soft pricing environment with continued low consumer price index (CPI) inflation or even deflation in the producer price index (PPI), largely due to weak domestic demand and oversupply in certain manufacturing sectors. 3. Key drivers of 2025. Inflation. The why. Dedicate a segment to the specific, powerful forces keeping prices high and volatile. Geopolitics and trade fragmentation. This is the most significant new factor. Increased trade restrictions and the threat of a tariff spiral, countries retaliating with their own tariffs or raising costs for imports, production and supply chains globally. Labor market dynamics. Despite some easing, the global unemployment rate remains historically low in many advanced economies. This shortage in the labor pool leads to stronger wage growth, which businesses pass on to consumers as higher prices, particularly for services. Fiscal policy. The mix of government spending and tax policies in major economies. The fiscal impulse continues to be a wildcard. Stimulative fiscal policies can counteract central bank tightening and fuel demand, leading to higher inflation. Commodity volatility. While energy and food prices are expected to stabilize or average lower, geopolitical conflict, for example, in the Middle East or Eastern Europe remains a risk that could cause sudden, sharp spikes in oil, gas, and food prices. For financial implications and investor takeaways. Monetary policy uncertainty. The divergence in inflation means central banks, like the Fed and the ECB, will have different timelines and paces for interest rate cuts. This creates volatility in bond markets and currency values. Investment shift. Higher, more volatile prices are becoming the norm, suggesting a shift away from the low volatility environment of the past. Investors should focus on resilient sectors and companies that can effectively pass on higher costs to consumers. The stop-and-go risk. Many experts caution that 2025 could mark the beginning of a stop-and-go inflation pattern, with shorter but more frequent cycles, forcing central banks to be highly agile in their policy decisions. Center your analysis on the tariff trade policy risk, as it is the most current and highest impact driver for 2025. Ultimately, these new inflation numbers aren't just headlines. They directly impact your wallet and your retirement accounts. Now, I want to hear from the MrBax community. Which investment strategy do you think is going to be the safest and most profitable in this high volatility 2025 environment? Are you worried about the renewed tariff risks? Drop a comment and let's start a discussion. And if you want more videos breaking down how global finance impacts your personal life, make sure to smash the like button and subscribe.